I shared 10 trades today. All 10 of them worked. 100% success rate. I went 10 for 10 today. If you guys want access to all of my day trades, swing trades, live entry and exit points as I'm entering and exiting everything, as well as now I'm going to be sharing crypto trades as well. For access to all of these different things, the link to join is down below. I hope to see you guys there. Like I always say, the proof is in the pudding. Let's get started with the video. All right, so basically, the market is down 1% to start the week. October 2nd is historically the weakest week of the month of October. Generally, the second week of October tends to have a pullback and is red. So far, it seems like that's in line. So the first thing that I want to look at that has been a good precursor to weakness historically is the HYG, which is the high yield corporate bond ETF. So I overlaid this with the SPX. So this is the SPX here. And what I want to just show you guys is when the HYG starts to really show weakness. So this is something similar. If you guys were watching my YouTube videos for a long time, I'm sure you guys have. When I would show the 30-year bond or the 10-year bond, the 2-year bonds, etc., preemptive strength or weakness in those would sometimes translate into the QQQ or the overall market, right? So this is similar. So when the HYG would start to show weakness, the overall market would generally then follow. So what we're seeing right now is the HYG really starting to capitulate, very weak, and we broke below a major level of resistance support here at 79.50. So you can see here prior major level of resistance right there, and the HYG clearly started to break below. So now what's interesting is that the HYG is really starting to show weakness, yet the SPX has not, really started to show that much weakness. We haven't really broke through the prior levels of support. So this is definitely not the most bullish sign for the market. Next, let's take a look at the VIX. The VIX is obviously, we are currently, we went long the VIX. So that's up, I think it's currently up 20%. So that's nice. The VIX is interesting, and we have to watch the VIX because it has an inverse relationship to the market. When the VIX is showing strength, the overall market shows weakness. So similar to the SPX and the overall market, the indicator that I was showing yesterday of how it's bullish, this advanced decline indicator is very bullish on the VIX. So the VIX is showing strength. The advanced decline indicator is crossing above from bearish territory into bullish territory now on the VIX. The second week of October tends to be very bearish. Things are leaning towards more downside. And the VIX, as well as the HYG so far that we've seen, are showing more volatility in the market. When there's more volatility, generally there's more weakness. So this is another clearly bearish situation right now for the overall market, and it's bullish for the VIX. So this is a chart of the 30-year bond. The 30-year bonds are important because they have generally a correlated relationship to the market. When the bonds are showing weakness, that means that the overall market is also going to be showing weakness. And right now, we can see that we built a bear flag on the bonds, and then now we just completely broke below. So right now, the bonds are showing weakness. What's interesting, though, however, is we got an open and a close outside of the lower level of the Bollinger Band. This starts to show extreme weakness and extreme overextension to the downside. Now, if we continue, this is the only way. If we continue to open and close outside of the lower level of the Bollinger Bands, then it will signal that we are very overextended to the downside and we should rip. If, as we continue monitoring the 30-year bonds for the next few weeks and days, if the Bollinger Bands start to fall much lower and the 30-year bonds open within the Bollinger Band like this, then it can continue to fall much lower during that same day. Because if we open within the Bollinger Bands, it doesn't necessarily mean that we're overextended to the downside. Because we can easily, so this would be the open candle. This line is the Bollinger Band. You can see that we opened within it, right? If we open, we can have another monstrous red candle. And then it would just be, the next day. So this is where we close, right? Then the next day, we could just end up over here. The Bollinger Band level could just drop over here, and then we can maybe open outside and then have another red day. So there's a lot more room to the downside without ever even being overextended, potentially. Right now, we just had an open and close outside. If we open within the Bollinger Bands today, we could have another huge red day tomorrow. Basically, I hope that makes sense. So that's what we're currently going to be looking for. The 30-year bonds are clearly showing weakness. The HYG is clearly showing weakness as well. What's interesting is that the advanced decline indicator on the bonds are showing strength, yet price action is weak, which shows that there's not enough buyers to make this setup work. So basically, we just have to see if it finds support down here at the prior levels of resistance here, down at 120.18. And that is going to be a very interesting level to see if the bonds can hold, because that would essentially be the length of this flagpole to the downside. So let's see if that ends up being the case. But so far, these are all showing, the bonds are starting to show that there could be a bit of a bounce, but it's immediately showing some weakness. Honorable mention, the Chinese stocks are making highs again, and they are just completely shattering all the levels. Baba, Baidu, JD, they're all doing really, really well, primarily because of the Hang Seng Index. And the Hang Seng also has a bit of a influence on Bitcoin. So that is very, very bullish for the Hang Seng and the Chinese stocks at the moment. Next, let's just go down the list of all of the large tech stocks in the Magnificent 8 and see how everything is doing. All right, so clearly Apple is breaking down below support. We're holding now at 220.50. If it breaks below this, we're going to see 217, 218 area. And that is, a lot of these stocks are basically showing the same thing. So if you look at Microsoft, Microsoft is also sort of doing the same thing. It's getting to almost be a bit overextended to the downside, but there's still more room to go. So Microsoft, I would want to see it retest basically these levels of supports over here within 402 to 405-ish area. If we get to 407, that would be the first spot that I would probably add into, but the safest opportunities would be levels or retests of these levels down here. And then, I would really want to see some abrupt, strong closes outside of the lower levels of the Bollinger Band. And we could use these as opportunities to go long for basically 6 months. And that's what I am currently looking at on Microsoft. So we looked at Apple and Microsoft. They both have room to the downside. Amazon also, it made a bull flag. It made a bear flag. I was talking about how these stocks would be the ones that would end up bouncing if there is a bullish move. But obviously there was not a bullish move, so we started to show some weakness. This standard deviation is also turning in green. This did not help. So Amazon has some more room to go to the downside around 174, 175 area. Let's look at Netflix. So Netflix is also, it was basically at highs. We're somewhat still holding at levels of support. It doesn't look bullish, right? Meta, though, is, still holding this 3.618% fib level. at 584. So Meta is still holding really, really well, which is great to see, to be honest. And Meta, the chips, the winners are going to be the only reason why the market maintains itself. So Meta has been a clear winner. The market is not going to move based off of Microsoft bouncing. It's going to move based off of the continued strength in stocks like Meta, in the chips. So NVIDIA is, clearly strong. AMD is clearly strong. It's going to be based off of these stocks. ARM, well, not really ARM. It's not a whole, but it's going to be based off of the leader chip stocks. So that's essentially what we need to continue watching. Took a look at Netflix already. Amazon, Microsoft, Google. So Google is also a similar situation. It's not that bearish. We're still above levels of support. Tesla is also similar to what we were looking at with Amazon. It's a bear flag. It didn't bounce and start to show some weakness. The AI stocks are the things that are holding it up. And basically the VIX is showing bearishness for the market. HYG and the bonds are also showing bearishness for the market. All of these large tech stocks are showing bearishness. Immediately, there should be some more room to the downside in these stocks as well. So let's go ahead and just take a look at the indices now, and I'll give you guys the levels and essentially what I'm looking for. So let's get started off with the indices. First and foremost, let's take a look at the IWM. The IWM is a big proponent of how bullish crypto, the banks, obviously. So crypto, the banks, and Amazon and Tesla. So the IWM really influences those different tickers. So the IWM is not looking too hot. Clearly, it's clearly the weakest immediately, right? Whereas the SPY, so if you look at all three of these during the day, the IWM, the QQQ, and the SPY, you will start to see how the SPY is influenced by the IWM as well as the NASDAQ. So it's important to monitor all of these on not only a daily, weekly, larger time frames, but also an intraday time frames. It's very, very important. So the IWM doesn't look too hot, okay? For a downside move, it looks like we can easily see 208 to 210 on the IWM. And that would only be about a 3% drop. So not necessarily going to happen this week, because that would just be a very, very weak. It would be a very not strong week. And, I'd be surprised to see it all drop this week. I wouldn't mind. Our VIX calls will be up huge. But that is essentially a big place where people are going to start looking to buy. So that's that on IWM. The NASDAQ is not looking as weak, but you could see that there is a trend line from back here at the most recent lows. So we found a trend line from December 2022, and it has multiple touches. So over here, all throughout here, it was acting as levels of support and resistance, and it acted as support over here. And then essentially, it almost essentially basically acted as support again in December of 2023. And then literally, this has been a very, very prominent trend line. So now, just you could see for the past 2 years, essentially. So now what just ended up happening is we had a close above on Friday. We ended up gapping below, and we never even reclaimed this level again, and we ended up just closing below it. So this is also in terms of price action, in terms of price action, this would be this is not extremely bullish, but this would be a situation where they could make it a bear flag, no, a bear trap. So this is clearly on paper, clearly bearish situation. The NASDAQ is bearish. The IWM is bearish. All the large tech stocks are bearish, except AI. The bonds, the VIX, they're all bearish. So you can clearly see things are looking bearish. But now the issue is there's still clear-cut bullish momentum. And just for the sake of this, the downside target would be 473 to 475 on the NASDAQ. It's going to most likely drop way lower than that. The SPY, same concept. I was showing how on Sunday it didn't make any sense to go long. Unless you were holding longs already, it didn't make any sense to go long here. And I said that there was two main trades that you could take. You could either take a short here and start adding to shorts, or you could wait for 585 to 590 and go short up here. But either way, I was not saying to be long here. Even if we ended up ripping to the upside, it was not ever going to be a situation where I would start going long on the overall market. And yeah, that's essentially that. The SPY is still holding support. The IWM is still holding support. Apple was still holding support. These stocks are still, the NASDAQ is still holding support, but they're showing bearish setups, and that is something that we can't overlook, unfortunately. So so today I was saying how if the market ended up breaking below 570.40, this is another thing in the Discord. I shared the levels. So I shared that if we ended up closing below 570.40, it would be bearish. That's exactly what ended up happening. Once we closed below 570.40 today, it was nothing but bearish momentum. So that is definitely something, if you guys are interested in, you guys gain access to the different levels of where I think it would become bullish or bearish, etc., etc. That is definitely going to help. And at the moment, the main things that we have to look for is how bullish the market is going to be heading into two different things, basically. Thursday, we have AMD, a conference for AMD. We have on Wednesday, I think we have Amazon's Prime Day. And then also on Thursday, we have Tesla's Robo-Taxi Day. So as we know, heading into news events, we get bullish momentum heading into the news events. So buy the rumor, sell the news. So once the news event occurs, that's when things become a bit bearish and the sell-off occurs. Same concept when there's earnings. There's an earnings run-up. The price of the stocks or anything, they run up and they generally tend to be bullish heading into the earnings date. So if earnings is at 4 p.m., the day before that, etc., price starts to creep upwards into that 4 p.m. time for earnings. So similar situation here. I'm expecting something to start being a bit bullish heading into Wednesday, Thursday on those stocks. And then based off of those stocks moving upwards, potentially, right, the overall market should, based off of those stocks as well as the AI companies, the market should also end up bouncing. So let's end up seeing what happens with that. Regardless, seasonality-wise, for November, December, things end up being very, very bullish. And then at the end of the day, we're still holding on to VIX calls. So regardless, up here, a lot can happen, but we are hedged properly, and these VIX calls are going to do justice. So I'm excited. These next few weeks are going to be very, very exciting. We're going to see how well history treats things during election year. And I'm really excited to see, especially into the end of October, heading into the election day. Especially with after elections, this is historic times. And, you know, it just, in my opinion, it just pays to be sort of as bullish as possible. That's my thing. It pays to be as bullish as possible. So any dips, unless things completely capitulate with clear cut, like strong strength, then, things can be bearish. But if we have like these like willy-nilly like retests of support and we're like still holding above and we're barely cracking below, etc., that's still strong. So the momentum is still there. The momentum is still strong enough to the point where it's not allowing price to break lower. So that's how you have to look at it. And what we're seeing right now, especially with chip stocks, if chip stocks are continuing to show strength like this, it's really, really difficult to be overall bearish, in my opinion. So that's my thought process. I'm talking about for long term. I'm talking about for months out. It's tough to be bearish long term for months out. I'm talking in the short term. Sure, give us some pullbacks, but longer term, any of these pullbacks really are going to be buying opportunities every single time, guys. Every single time for years and years, whenever we would get into calls or longs at these levels of support, I would tell you guys, and it would work out. How often would it work out? Every single time. So even if we were trying to go short at tops, I would share everything. I would make YouTube videos about it, and those would work out too. So it is what it is, man. I am very happy about making these YouTube videos again. So, yeah, this is, I love doing this, and just looking at the overall market, especially for these next few weeks, this is going to be historic. So this is going to be historic. So try to be involved in the market as much as possible. If you don't want to trade as much because the market might be very, very tumultuous and turbulent and everything, still watch the charts. This experience, the first-hand experience that you receive, is going to do right by us 15, 20, 25 years down the line. So it's very, very important to continue to monitor the market, try to make the best decisions at all times, and leave emotions out of it. So I hope you guys enjoyed today's video. If you guys are watching all the way to the end, that means a lot. So, and if you guys even, just if you're watching regardless, it means a lot. So, once again, if you guys want access to my trades, all of my day trades, entry and exit levels, the link to join is down below. So with that being said, hope you guys have a good, wonderful Monday. Let's have a good rest of our week. All right. Love you guys. Have a good one.